and welcome to another video on accounting. Today we are going to talk about adjusting entries. Now, specifically, we are going to talk about the different types of adjusting entries. In my previous video, I have talked about the reasons for adjusting entries, so I'd encourage you to watch that video before this video so that you can have some background. Now there are four types of adjusting entries: prepaid expenses, accrued expenses, unearned revenue, and as well as depreciation expense. Just as a reminder that we do or make adjusting entries because we need to report correct amounts of assets, liabilities, and owner equity. So do watch the other video for more background on this. In this video, we are going to talk about the first of them, that is the prepaid expenses. Now, this line represents the life of a business. The life of a business is divided into periods. So that would be a period of 1 year, and we call that accounting period 1, accounting period 2, and on and on. This period is for 1 year, which means that the business keeps track of whatever happens in the business for 1 year and then prepares financial statements for that year. However, businesses internally prepare financial statement more regularly so that the management knows how the business is doing. So they divide accounting period 1 year long period into months. So January would be an accounting period in itself, February accounting periods also. So keep that in mind. So what's a prepaid? A prepaid is a service or supplies bought and paid for in one period. So you can see that vehicle insurance and supplies are purchased in period 1, say January, but they will be used or consumed in a future period, say February. So the important question is just as a reminder that they are bought and paid for in one period but consumed or used in another period. That's a prepaid. When they are purchased, they are not used. So they are asset. And since they are purchased to be used in the future, they are prepaid. So the business is going to debit a prepaid account. Now, they will add the name of whatever service they have purchased. So in this case, they purchase insurance, they are going to debit in prepaid insurance. And obviously, they paid cash for it in period number 1, so they are going to credit cash. That's the journal entry in period 1. In period 2, when these services or supplies are used, and for accounting purposes, anything that is used becomes an expense. An expense is debit. So in period 2, the business will debit expense. But the proper word they will use is whatever service they have used. So since in this example insurance is used, they are going to say debit insurance expense. And they will credit the prepaid so that they can update the balance of the prepaid account also. The second one is, by the way, an adjusting entry. We're going to look at some specific examples of prepaid, in this case insurance. So on January 1st, XYZ Limited paid $1,800 for vehicle insurance to be used in the next 3 months. So they bought this service in January to be used in February, March, and April. So insurance will be used in the future. Now the question in front of us is, what is going to be the journal entry for each of these months? So in January, when it was purchased, what will be debited and what will be credited? So since it is purchased and XYZ Limited paid cash for it, cash will be credited with for $1,800. And what is it that the cash was paid for? It is paid for a service to be used in the future. That makes it prepaid. And what's the name of the service? Insurance. So they are going to debit prepaid insurance $1,800 and credit cash $1,800. Now, at the end of February, 1 month of insurance will expire. That is, they will use 1 month of that insurance. And 1 month of the insurance is worth $600 because $1,800 is for 3 months, $600 per month. So just to give you a T account format is that when the service is purchased, the debit goes to prepaid expenses. So you can see in the top right corner, the prepaid expense account is debited. as well. And a T account is debited. I'm going to update the T account so that you understand how the balances work as well. So at the end of February, when 1 month of expense is used, that expense obviously becomes the usage obviously becomes an expense, so the business will debit it. But what is it that they have used? Insurance. So they are going to debit insurance expense. Now, this insurance was purchased already in January, so that the business has used the prepaid insurance, so it will credit prepaid insurance. So if you look at the T account on the top right corner, the $600 will be updated at the end of February on the credit side of the insurance, leaving you a balance of $1,200. Similarly, the journal entry for March would be again 1 more month of insurance has been used, so we are going to debit insurance expense. And the what is it used? The prepaid, so we are going to credit prepaid. Again, if you look at the T account in the top corner, you can see that the $600 has been updated on the credit side, bringing the balance to $600 in the prepaid insurance account. And lastly, when in the month of April, again a usage happens, so it will be debit insurance expense $600 and prepaid insurance will be credited again. So if you look at the T account in the top right corner, we can update for April. That will leave you a balance of zero. So now we have used all insurance. Let's look at another example of prepaid, this time rent. So here, January, XYZ Limited paid $3,000 on January 1st for rent for 3 months starting in January. So they paid in January for 3 months, and that rent service will start in January, February, and March. So that's when the business will use the office space for 3 months. Now, the journal entry at the end for January will be at the time of purchase and at the end of first month of usage. Similarly, when the second month usage happened, what would be the entry? And the third month usage happened, what would be the entry? So at the time of purchase, XYZ Limited paid $3,000. So paid means cash is gone. That means cash will be credited. And what is it that the business paid cash for? Well, it paid for a service, for rent, for office use. So, and this usage will be in the future. So that makes it prepaid, and it will debit prepaid $3,000. Now this 3,000 is for 3 months. That means $1,000 for each month. Now, what will happen at the end of January? Before we look at that, let's update the T account. So you can see that the T account 3000 has been updated for prepaid on the top right corner. Now at the end of January, 1 month of that service has been used. So when something is used, it becomes expense. Now we ask ourselves, what is it used? It's the office space that's used, and the office space is rent expense. So we are going to debit rent expense $1,000. And what will we credit? Since we have already paid for rent and it was a prepaid, we should decrease our prepaid by crediting it. So if you look at the T account, you can see that $1,000 on the credit side of the prepaid indicates that 1 month has been used, bringing the balance to $2,000. Now, what happens at the end of February? Same thing. Well, again, office space is used. It will be debit $1,000, and credit will go to prepaid as well. So see the T account updated again and bringing you the balance to 1,000 now. And similar entry will be repeated in March. So debit rent expense for another $1,000 because office space is used, and credit will go to prepaid rent. So if you look at the T account, now all the $3,000 are on the credit side, leaving you with a balance of zero. Let's look at the last example, this time supplies. So you can see on January, XYZ Limited purchased $500 of supplies, and those supplies obviously will be used in the future. So the supplies on hand on January 31st are $150. So they purchased $500. At the end of January, they have $150. At the end of February, they have $50 worth of supplies. And at the end of March, they have nothing. So for us, the important thing is what would be the journal entry at the time of purchase, at the time of usage of supplies for each of these months. So at the time of purchase, since business paid for it, it will credit cash. And what is it that they paid for? Well, they paid for supplies. They are going to debit supplies $500. Now, at the end of January, you can see $150 of supplies are on hand or remaining, which means they have used supplies $350 worth of supplies. And whenever something is used, it becomes an expense. And in this time case, what is it used? Supplies are used, so we will call that as a supplies expense, and a supply expense is debited for $350. And what is it used? Again, it supplies, so we are going to decrease supplies by crediting it. Similarly, at the end of February, we have $100 worth of supplies left, which means we used $50 of supplies. And using that means it becomes expense. And what is it that we used? Supplies. So we will debit supplies expense 50, and we have used supplies, so we should decrease the amount of supplies here also. Finally, at the end of March, we have totally used that now. So at the end of February, we had $100 remaining, $100 worth of supplies remaining, which has totally been used now in March. So we are going to debit our supplies expense $100 and credit supplies $100. By that time, our supplies accounts balance will be zero. So this was prepaid. I hope this was helpful. These are the adjusting entries. Just to give you a reminder that these are the four types of adjusting entries. So the adjusting entries for prepaid are at the time of purchase and at the time of usage. When you buy them, remember to debit the prepaid plus the name of the service you are purchasing. So prepaid rent and credit cash. And when they have been used, you are going to debit an expense in the name of the expense, say rent expense, and credit the prepaid. So hopefully this video was helpful. Do watch it again and again. And I would like you to subscribe, like, and comment on the video. And don't forget to click the notification icon for more videos. And remind you that other topics, other types of adjusting entries will be explained in the other videos. So do watch those videos.